Hi guys, welcome back to Tax Q&A. In today's video, I'll be answering the most asked questions about HUF. So let's get started. HUF stands for Hindu Undivided Family. Under the Income Tax Act, there are 7 types of persons recognized for taxation, and HUF is one of them. It is treated as a separate legal entity formed by members of a single family, has its own PAN and bank account. Why the need though? See, back in the day, families would own and manage wealth and property together as one unit, not as individuals. The idea of HUF was brought in to legally recognize and protect this joint ownership. Now, over time, the whole concept of joint families has started to fade, but HUFs are still around. These days, they're mostly used as a tool for tax planning. Well, honestly, anyone with a family. If you're married, you can create an HUF. Moreover, it's called Hindu Undivided Family. But it's not limited to Hindus. Even Jains, Sikhs and Buddhists are allowed to form an HUF under Indian law. Now, how do you actually form one? See, an HUF technically comes into existence upon marriage. To legally register it, you will need an HUF deed stating its formation, a PAN card in the HUF's name, and lastly, a bank account for the HUF. So, like we discussed, a family can form an HUF. For example, if Mr. Gupta decides to form an HUF, his wife and children automatically become part of it. Later on, even his grandchildren and great-grandchildren will also be included in the same HUF. Now, within an HUF, there are 3 types of members. Number 1, karta. Since Mr. Gupta started the HUF, he becomes the karta. The karta is usually the eldest male member of the family. But nowadays, even an eldest female member can become the karta. The karta is basically the manager and decision maker of the HUF. Then, co-parceners. These are the members who are born into the family and automatically have a right to the HUF's property and assets. Co-parceners can also demand their share and even ask for partition of the HUF if they wish to. Lastly, members. Members are also part of the HUF, but unlike co-parceners, members cannot demand partition or claim a specific share in the assets. So, to summarize, in Mr. Gupta's HUF, he himself will be the karta, his son and daughter will be co-parceners, and his wife, Mrs. Gupta, will be a member. When Mr. Gupta's children get married, their spouses also become members of the HUF. Later on, the son's children will become the co-parceners, while the daughter's children will be considered members. Lastly, at any given point in time, the HUF can add co-parceners only up to 4 generations, including the karta. See, the assets of an HUF are collectively owned by all its members. No single person can claim exclusive ownership. However, the share of each member can be determined like this. For example, let's say Mr. Gupta's HUF owns assets worth Rs 20 lakhs. Mr. Gupta, his wife, and their 2 children would each hold an equal share, meaning Rs 5 lakh each. When Mr. Gupta's children have their own kids, those grandchildren automatically become part of the HUF and inherit their parents' share. So if Mr. Gupta has 2 grandchildren, his son's original 1/4 share will now be split equally among the 3 of them, making their individual share 1/12 each. As you would have already noticed, a daughter-in-law does not get a direct share in the HUF assets. Similarly, the husband and children of a daughter do not inherit any rights in her father's HUF. Yes, it can. Since HUF is a separate legal entity with its own PAN and bank account, it can also invest in shares, mutual funds, and even apply for an IPO. Any income earned from these IPO investments, whether through capital gains, dividends, or interest, will be taxed in the hands of the HUF, not the individual members. No, an HUF cannot earn salary income. This is because salary income is tied to an individual's personal skills, expertise, or employment, And since an HUF cannot be employed or offer personal services, it cannot earn a salary. However, an HUF can earn income like business income if the HUF runs a family business, rental income from properties owned by the HUF, capital gains from selling HUF-owned assets like land or shares, dividends, interest or other returns from investments made in the name of the HUF. Depends on the income. If the HUF earns income from rent, business or other sources, it will be taxed at slab rates. The tax slabs and rates will differ based on the regime opted for. In case of profits from selling of assets, the capital gains will be taxed at special rates based on the type of asset and whether the gains are short-term or long-term. Just like individuals, an HUF can also claim various deductions, such as basic exemption up to Rs 3 lakhs, 1.5 lakh deduction under Section 80C for investments like ELSS, PPF, etc. Section 80D deduction for health insurance premium paid for its members. Exemption on LTCG of up to Rs 1.25 lakhs from equity investments. However, there are a couple of restrictions. Since an HUF cannot earn salary income, it does not qualify for the Rs 75,000 standard deduction. The 87A rebate is also not available to HUF. There's one last thing you should know. Income earned by the HUF is taxed in the hands of the HUF itself. However, if an individual member transfers a movable or immovable personal property to the HUF, it triggers clubbing provisions under the Income Tax Act. In such cases, the income from that property will be clubbed with the transferor's income and taxed accordingly. Since HUF is treated as a separate entity, it can be a smart way to manage taxes, especially if you have income from sources other than salary. Think of it like having an extra person in the family to share your income with, which means the overall tax burden gets reduced because both you and the HUF are taxed separately. Let's look at some of the ways people save taxes using HUF. Number one and the most classic use case is real estate properties. If you have any ancestral property, you can transfer it to the HUF. For example, let's say you and your spouse are both salaried employees and fall under the 30% tax slab. If an ancestral property generates rental income, you would have to pay 30% tax if it were taxed in your hands. But if the HUF owns the property and the rental income is below Rs 3 lakhs, you would pay zero tax on that income. Even if it exceeds 3 lakhs, it will be taxed at a lower slab rate, which saves a significant amount of tax. Next, you can also open a Demat account in HUF's name. This gives you an additional account to apply for IPOs, increasing your chances of allotment. Plus, any profits from stocks or mutual funds in this account will be taxed under the HUF's PAN. So if the gains are long-term, the HUF can claim the Rs 1.25 lakh tax exemption every year. Another common way to save taxes is jointly purchasing a property with the HUF and adding it as a co-borrower on the home loan. Since the loan is taken jointly, each borrower, including the HUF, can claim up to Rs 2 lakh deduction on home loan interest under Section 24B, up to Rs 1.5 lakh deduction on principal repayment under Section 80C. So effectively, by including the HUF as a co-borrower, the family can reduce their taxable income by up to Rs 3.5 lakh every year. To initially generate capital in the HUF, you can transfer money and any movable or immovable properties at the time of creating the HUF deed. Any money or property added at this stage will be treated as the HUF's capital and clubbing provisions will not apply. This means the income generated from this capital in the future will be taxed in the hands of the HUF, not the individual contributors. Well, there's no automatic dissolution of an HUF. The HUF is dissolved when the family decides to partition the HUF assets. On partition, the assets are distributed among the co-parceners and members according to their share in the HUF. The distributed assets then become individual property of the members, and any income generated from them will be taxed in their individual hands moving forward. And with that, it's a wrap. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. Catch you in the next one. What is that? Is that a meme? मैं meme बन जाऊंगी. So please.
You're already one.
Don't say that. I don't listen to songs. I only listen to Tax Q&A. That's my jam. And it should be everyone else's jam. I need a break. Am I a parrot? बोलती जाओ. People will get tired of me. I don't want that.